Hello and welcome to our in-depth analysis of today's US stock market with a focus on the August jobs report. We'll break down the numbers, explore how investors are reacting, and discuss what this means for markets going forward. As of this morning, the major US indices are showing resilience. The S&P 500 is trading near 6,525, the Nasdaq around 23,150, and the Dow Jones about 45,650. This strength reflects optimism among investors despite ongoing economic uncertainty. Markets are closely watching any signs from the labor market that could influence Federal Reserve decisions and overall market sentiment. The August non-farm payrolls report showed an increase of 73,000 jobs below the expected 106,000. This slowdown is notable compared to previous months and signals some softening in the labor market. The unemployment rate ticked up slightly to 4.3%, showing that hiring has cooled but remains stable. Investors are analyzing this data to anticipate how it may impact Fed policy in the coming months. Markets reacted with some volatility after the report. The S&P 500 dipped slightly while the Nasdaq and Dow showed mixed movements. Some sectors like technology and healthcare held their ground, while manufacturing and retail showed more weakness. Overall, investors are weighing weaker labor data against the potential for Fed rate cuts. The Federal Reserve is under scrutiny after the soft jobs report. Current market pricing gives a 98% chance of a 25 basis point rate cut in September and a 91% chance of at least 50 basis points of cuts by year end. Lower interest rates could boost borrowing, support equity markets, and help the economy if growth slows. But rate cuts also signal caution, suggesting the Fed sees risks in sustaining economic momentum. Some sectors respond differently to labor market shifts. Technology and healthcare remain resilient, benefiting from continued demand. Manufacturing and retail are more sensitive to hiring slowdowns and consumer spending trends. Investors are watching these sectors closely to gauge overall economic strength and market opportunities. The US jobs report also affects global markets. Asian and European stocks followed Wall Street's movements, reflecting the ripple effects of Fed expectations and US economic signals. Global investors are closely tracking how rate cuts or continued market volatility might influence international capital flows. Investors should monitor upcoming economic indicators such as consumer confidence, retail sales, and manufacturing reports. These data points will provide further insight into the health of the economy and influence Fed decisions. Staying informed about these events is key to anticipating market direction. In summary, the August jobs report shows a cooling labor market which could increase pressure on the Fed to cut interest rates. Markets have reacted cautiously, with some sectors showing strength while others lag. Investors should keep a close eye on upcoming economic data and Fed announcements, as these will shape market trends in the weeks ahead. Thanks for watching. Stay tuned for updates and make sure to subscribe for the latest market insights.